With this trading strategies and tools that I'm going to give to you, you can legally rob the markets. It is very important to use this 3-step method always, with a compound effect of experience over months and years. So don't be just a fool and change anything. Stick to the path and you will see for yourself results. First of all, please use a demo account. And I love to use a 1-minute chart, because most movements that take 30 minutes, sometimes 15 minutes, or even up to 2 hours. And if you would use a 5-minute chart or a 30-minute chart, you may have only 5 or even 20 candles. Instead, the more high quality informations you get, the faster, the better decisions you can make. And this is the reason why I love to use the 1-minute chart. It means not to trade every signal, what I'm going to teach you in this video. It's about to take only the best signals using this 3-step method. First step number 1, please use always a demo account. We are aiming for the bigger structured highs and lows. There's a session indicator that is called MKT market session. If you go to TradingView indicators, FX market sessions, and make sure that on the bottom right that this is set to Chicago time, that this is 9 a.m. to 3 p.m. And it's very important that you understood. I just was entering this indicator. Usually you should set this up to 3 p.m. And what happens is that this is the US market to the US market session. And what happens is the market aims for bigger structured highs and lows, and also mid rotations, what I'm going to show to you with this first step. Please keep in mind, outside of these times, the market is just struggling to move a lot. So trading in this time is very important. So the biggest structured highs and low is here. For example, this is a high and this is a low. And very important is that the longer the market never reached that, the stronger it is as a magnet. That means that on a compound effect, the longer the market trades and never went to this high or low yet, the more people place their stops there. So once the market reaches there, people will have pain. And once the market reaches there, you can see that it pushes in that direction, what is pretty nice. And so instead of saying like, I can see this $1,000 move that the market moves there, trading to these highs and lows once we can see that. But first of all, before we can see pressure, because that would be step number 2. Step number 1, identifying where the biggest structure is, and also sometimes the smaller structure if the market is not running as it's supposed to be. As you can see, for example, here are smaller structure. A high is always a green and a red candle, and the low is always a red and a green candle. And every time there's a distance, as you see here from the left where the market never went yet until here, this is a high and this is a high here. This would be also a high here from green and red. Because these two are pretty close together, we can assume that the market will run at both at once. But because from here to there, there's this bigger distance, I would more assume that the market will do here a retracement, because the market will do 2 things if there's a bigger distance. Either it does a retracement, as you see here, or it will go through very fast. So trading right away here is, for me, something very worse. It's more about, based on this trading strategy, trading when we can see that the market goes there, and that's step number 2. So we then identified from the left side these highs and lows where the market never went to, for example, until here. The second step is to use a 1-minute chart and to have 2 ways to read pressure. Actually, those are 3 ways. The first way to read pressure for me is to see more than 3 red candles, because if the market goes up, it does only 1 or 2 red candles, and if the market goes down, it does only 1 or 2 green candles mostly, rarely even 3. Once the market starts to make 3 candles in the opposite color, very important, it starts to make opposite pressure. As you see here, the first time it does here 4 red candles. This is not that powerful. You want to see powerful 3-4 red candles, what the market starts doing here. Here it starts the first time to make these 4 candles. And here, for example, you see here that the market does more candles. And if the market does that, you can see here, there's a doji in between, but that's totally okay. That's fine. You can see that the pressure increases with the red candles when comparing it to before here on the left side. And it's going here into a half circle inside. So that shows us that the market turns around and has pressure down. The second one is that the market does a lot of rotation. So it wiggles a lot in one direction, one-sided, using a 1-minute chart. And the third thing is that while it wiggles in one direction, that we have more red candles than green candles, and we can see that it's more aggressive on red than green, what is very important. Once we can identify that, we go to the third step and we make sure we have we read also the retracements, because most likely the retracements are the same. Check this out. This retracement here is almost the same here as this retracement here that you see here. So it's about identifying what are the mid retracements. For example, from here to here, for example, is the same. From here to here is the same. So I would not just sell here down here. I would wait until the market does the same retracement and maybe sell here where this red candle is. adjust your $100 on this until this wick, lose $100, and then see the market does the same retracement and maybe enter the trade here. Or let the market go down and then look forward about that the market does the same retracements. For example, this kind of retracement, the market did also here. So it's very important, even though there is a color switch of a green and a red candle, and this is the only one setup that is important for me, to trade a green and a red candle. Because trading too many indicators or trading too many setups can lead to anxieties. So having $1,000 divided into 10 trades, always the same market, the same setup, just as a green and a red candle, is for me very important. And then entering after the small red candle, stop placement here where my mouse is, and adjusting $100 and the take profit here for these lows here. So if you're unaware what the bigger structured low is, the more you pull it on the bottom together, the more obvious it is that this is a mid-rotation structured low here. From here is a bigger distance, as you see. And when we punch in here these lines, you will see that the market will have struggles here. As you see here, from here to even here, you can see here that the market starts here because these lows are pretty close. And from here to there, there's this big distance. And from there to here also, there's also this big distance. So you can see the market is reacting either fast through or just has struggles there. So trading not directly on these lines while the market is running there, while we can see freshly a lot of pressure. The more pressure, the better. And then we can also trade there. If there are these lows and we can see very much pressure, totally fine to aim for the bigger structure low. The rest is just quantity. Because what happens is if we adjust $100, if I have $500 in profit or even greater for each trade, if I lose 7 times $100 but I make 3 times $500, that's still $800 in profit by just risking $1,000. So the goal is to make this so profitable as possible, and for me personally that it's a good investment. For example, I'm going to show to you a trade that I did, and it was yesterday using with my just account, and this is called the heat map. And we can see when we just aim for the lows, when we just look at the lows, hold on, I gotta set this up here that we can see here more than a bit more, that we can go here a bit back. When we look here a bit forward, like when we look at these lows, what I showed to you, you can see that there's order processing. Order processing means just like resting orders, they're being called. So midnights, there are people that want to buy, for example, like this orange line here. You can see here from the left side, for example, what is the whole night maybe inside. And then you can see here like these orange lines, also the whole night it's inside. And then you can see suddenly also on the US session these thick lines. And these thick lines are buying orders. On the bottom you can see buying orders, and on the bottom top right side you can see selling orders. And you can see literally that the buying orders on the bottom are thicker and much more than on the top, the selling orders. And this is something what helps me also to trade. For example, if you just look at the whole channel here, I'm always talking about the same trading strategy, and I'm going to show it to you how I did it using a 1-minute chart with the same strategy. This is what is the best for me to start, and this is the indicator that I'm going to give to you. If the market is trending as I just showed to you, this is what I think is really cool to use. But once the market goes into a contraction phase, like this is not a big contraction phase, that's totally fine. On the left side, we also don't have that many contraction phases. But if it looks like this, and then like from here to here, we can expect more contraction phases. And there's the indicator that is called the anchored VWAP. We can find it on TradingView to the left side. So the anchored VWAP helps me not to overtrade on the bottom where it's just wiggling around a lot. I understood that mid rotations, like rotations, are usually that great. And I understood that the market will do with the distance of this kind of rotations multiple times, as you see, for example, here one time, as you see, for example, here a second time. It's just a bit smaller, but it's the same. And I love to use the 1-day VWAP or the anchored VWAP. In this case, we could have both, like placing the anchored VWAP always on the highest point here or on a mid rotation, or just using the 1-day VWAP. It's just almost the same. And for me, it's very important not to look that much, especially for a beginner. I think it's important not to look that much where the entry is. It's about where to place my stop placement, because if I know how to read the candles properly from green reds to green red, you can see the candle bodies goes lower above this 1-day anchor VWAP. And then green red goes here again lower. This shows me very well with the red candle, the green red candle is for me the setup that I just talked about. If I would place my stop placement here, adjust here $100, in this case it would be $600. And I would aim now for the biggest structured low that you saw on the bottom. When we go here to the left side, check this out. And this is something what is very important to me, is that when I see here on the left side, these lows here, and I can see from, check this out, from here, right? Those are these lows here. And I can see from here to there is a big, huge difference. So there will be a retracement. The market, it will be almost unrealistically that the market will go down here inside. So that's very important for me. So now when now going to the right side, that you understand this. This is on a compound effect. The longer the market is trading and never reached this reference yet, the more stop placement are down there. You saw this using this heat map with volume as I just showed you, and you will see exactly that the market. Check this out. The market was going exactly there on the price point. Inside this orange, it's like a pillow. You can see it goes into this orange pillow inside, and then it just does this retracement. So that was my goal trading on. That would have been with $350, around 4,050 or something profit. But instead of, I was closing the trade with 1,050 because I saw that the market structured so aggressive up. I would have not expected that it does such a big retracement. What I would not be ready to invest, like to give up. So I just exited here the trade. I was a bit stubborn because I wanted to have this winning trade, but it's important to go with pleasure over purpose. Like there's this trading strategy we need to hold on. If I have a risk reward of 5, I should actually not give it up, but because I have actually buying power, it is totally okay for this trade. So I'm just happy about my decisions, not giving up everything. So back to the trading strategy, using the anchored VWAP, we're going to trading view, and you find the 1-day VWAP and the anchored VWAP here on the left side. Anchored VWAP, always place it on the top side or in the mid rotations. The dangerous thing is we could place it also more down. I'm going to show you a picture, and this picture is pretty good because you will understand on a fixed rule set how to place the anchored VWAP by not over trading under contraction phases. It is this picture here that you see here, that to place it on the origin or on the mid rotation. This is very important, and not on the smaller structure, because I want to have the bigger movement that takes 30 minutes, maybe 1 hour, 15 minutes. And I want to have a small stop placement. That's very important, that with under seconds or minutes that the trade goes a profit. So it's psychologically so sustainable as possible to use high rollers. So it means like high position size, high risk. That is just important to me. So using the 1-day in the anchored VWAP, if you placed it, double click on it and turn off here the band multiplier. Go to style. Make the line here thicker. I love to use violet, for example, because that's cool. And then just the left line, the second line from the left, maybe the 1-day VWAP a bit thicker, and then the anchored VWAP a bit thinner. And then make sure when you go into template, you put here save as, and you save the default. And then you got the 1-day VWAP and the anchored VWAP inside. I hope this strategy helps you out. Go to tradewithjd.com/training. You find here free videos. It just takes you 1 hour to get a full trading strategy done. I hope it's better than whatever you paid before and whatever you saw before in trading. It will solve a lot of questions in trading. Wish you all love. Good trades. JT out.